we'll break the conversation up into a couple of segments, but I'd like us to begin with the issue of unlocking capital and what that looks like. It's not the only thing, but of course, money is an important one. So maybe to start with you, Tobias, about the barriers that manufacturers face in accessing capital, and in what ways you think banks can structure their products differently. All of the mics are on, so you can just pick that up and get going.
Also, thank you. If you look at the statistics, about 500 billion was loaned to businesses in 2023, and that increased to another over 600 billion. So you saw a lot of appetite from businesses to take loan. However, the concerns that came in is non-performing loans that also increase at the same level. So the question that we're asking ourselves is, are these loans matched to the needs of the businesses? And as I've seen the presentation that has been made by NCBA, it's very clear they're tracking from one level to another. So my take is that we need to give loans that are in line to the production cycle and to the production needs of every industry. So that assessment is very critical, so that we do avoid non-performing loans and increase of non-performing loans. Of course, there are other factors that may attribute to non-performing loans, but those that are within our control, I think this conversation enables us to address those. Thank you.
Yeah, and that's an important one. So, first of all, having a tailor-made. Yes, Tyrus.
If I could add that, and I think that's a really important point you've made. I think we're also coming off a very tough cycle with the interest rates environment that existed about, let's say, 12 to 24 months going back. Really high treasury bills at 18% and so on. So obviously that constrained credit growth to the sector because affordability was being challenged. And remember, this was affordability at all levels: the manufacturer, the SME that distributes, the consumer that buys from the SME. So we saw, with all the tariffs and taxes that were happening. So we are coming off that, and we are quite pleased with the low interest rate environment. It's good for everybody. People can borrow, people can service, people have money to spend. But I think, Tobias, you make a really good point. Structures matter. And so as you approach your bank for the facility that you want, I think let's have an open conversation around what do you really intend. And I know sometimes, yes, you want to expand your factory, but let's make reasonable projections and we will challenge each other and see that they are right, so we get the structure right. But the final point I want to make, and this is something that's sometimes taken for granted by a lot of businesses. If you get into trouble, if it didn't work out the way you did, please speak to your banker 6 months before you think you're going to have a problem that is called a missed installment. You then improve your chances way more to restructure it, to reorganize it, to manage it better to avoid all of this. NPLs, everybody has lost money, both the bank, the customer. And so it is very uncomfortable. So speak to your bank early when you're structuring it, when you're taking it. And when the structure doesn't work and your best projections didn't work out, speak to your banker so that we can work out how we can help each other.
So open lines of communication.
Thank you. Just to add on what Tyrus has mentioned, on cash flow, the capital for the business is key. And access to capital, everybody can access capital, just like we mentioned that any of the 40 institutions can give you capital. But what do we do to make it easier? What we look at is you get smart capital. And this comes in form of asset finance, asset-backed finance, the leasing, trade finance instrument. This you offer them to make it easier for your business to access the capital without strangling the cash flows, as well as putting additional collateral.
And what about So as we're talking about access to capital, the cost of it, but ensuring that this goes across the value chain, right? So also to suppliers and distributors. I wonder how important that is, for the sector, and how perhaps banks can ensure that that is happening. And perhaps you can also speak to, some of the other models that are there, blended financing and development finance. What are your thoughts around this, just going beyond the traditional lending systems that we've seen?
Yeah, we see, we're talking about partnerships. This is public-private partnerships. We see a lot of engagement. We see opportunities in infrastructure projects. So where financiers will come in and give funding to those structures.
And leasing is also one of them, isn't it? Lease trade financing.
Yes.
Yeah, talk to us about that and how important or how that would work.
Yeah, so for if I mentioned about when you're acquiring a big project that you want to put, and you look at the source of funds from your business. If you make a mistake and basically fund it with the cash that you're supposed to use for your paying your salaries, expansion and all that, then that brings a stagnation. And what leasing does basically helps you to deploy the project that you want, the infrastructure. It helps you do that project that you wished you could do, and not necessarily, basically like, let me just talk about a project like solar. If you put a solar PV in your factory, immediate benefit comes with saving on power. Like I would give an example of a project we did 7 years ago. So upfront, the customer would save 40% on power, but at the end of, like, say, 4 or 5 years, you've already recovered, and now you are getting from a 350 kilowatt power system. This customer is saving upward of 800,000 shillings a month without any amount that is paying down to the bank again at the end of the lease term.
Yeah, and that's interesting. What about the tax regime, Morris, now that you're here? In what way can a tax regime be more facilitative to enable lenders and bankers sort of unlock capital for manufacturing sector?
Thank you very much. Yes, everything that we do, any economic activity has a tax implication, unless there are specific exemptions that are provided. Now, in terms of financing of businesses, I have to say that in terms of the current situation, the legislative framework largely facilitates access to finances in the sense that actually financial services are exempt, for example, from VAT. And one of the key things that still, I would say, needs to be looked at is the cost of capital to the manufacturers, for example, particularly the SMEs. The SMEs have double-edged challenges in terms of financing, because first of all, the access to capital itself, to financing itself, because it requires some security in most cases, is a big problem. Then, of course, the cost of raising those finances is a big problem. But how then does the taxes come in terms of leveraging on these challenges? We have currently various incentives that are given for financing, including leasing. But there is still challenges that probably needs to be addressed, where we find that the cost of doing business is affected by taxation, because tax is a cost, and so long as the taxes are high or don't look at the circumstances of business, then they will definitely affect operation of businesses, including manufacturing. Yeah.
but what's your assessment of those fragilities that exist in supply chains due to both local and global shocks?
So in every circumstances that the manufacturing sectors face, they have developed creativity out of it. In 2020, when we had COVID, there was a lot of supply chain disruptions. We could not get raw materials because ships were not able to move. There was a lot of restriction for movement and all that. But what the manufacturers did is to identify other sources of raw material and also identify local opportunities. We were able to make masks which we were importing, but because of the supply chain disruption, we did find a solution. So the lessons that we learned out of that is that we need to find other avenues and other sources. Reliance on one source of supply chain in terms of raw material will not really help us. So right now we have manufacturers who have different sources of raw materials, either it's from Asia or Africa or South America. So we have identified different supply chain routes to get our raw material, and that is really working for us. In terms of the workforce, because there was also disruption in the workforce because of health. Some people lost their jobs, some people reduced the number, and through that, industries were able to turn to technology in terms of introducing machinery to able to complement the loss of manpower. So there is a balance. Every industry right now creates a balance in terms of the manpower, whether you use machine, and in some cases you use people to run the product, just to enable you to continue. Otherwise, you may be disrupted, and then that will be the end of it. But the government also played a crucial role, particularly during that disruption, by introducing incentives. That shows you that the government also has a role to play, and that role can be positive or negative and can impact largely the manufacturing sector.
Yeah, and I think one of the other things that I suppose, and I had you on and we spoke about this, Tobias, particularly with the US tariffs, was to start to look regionally, right? Because we've been looking globally for either access to raw materials or even as a source for some of our finished products. And so I'm wondering if the regional integration frameworks would be something that we start to think about. And maybe, Tyrus, you can talk to us about that AFCTA, EAC, and how perhaps financing can be used to sort of leverage on some of these opportunities that exist, Tyrus.
And if I may just go slightly back to the previous question on fragilities, look at the FX, environment 2022-23. That's a vulnerability that exposed quite a lot of, especially those of you who are on the importing side. Those of you who are on the export side, of course, were smiling broadly because you exported it at 118 and you're getting paid at 125. I'm sure that was quite nice for some. And that really came to play for tea sector, for example, horticulture. Tea sector, I think the tea manufacturers are manufacturers, I think the others are not. Interest rates environment I've talked about earlier. The socio-political activism we're seeing becoming, that socio-political awareness and activism that we're seeing is a fragility that I think we must recognize. It's disrupting your distributors, it's, trucks are getting banned and so on. I'm going to speak to that around how do you hedge against those risks with your financial partner. And NCBA, James mentioned about our group-wide capabilities across, Robert talked about leasing, asset financing, insurance. There are so many clients that we dealt with that whether their shop got banned or attacked are covered because they took an all risks cover, and so they are. So I think it's very important to be aware of what those fragilities are and use your financial partner. And NCB is a great example of the supermarket of products, if you like. And it might look like a cost to the point on tax earlier, but it's really expensive when you get caught on the wrong side of it. I also want to throw in fragilities around geopolitics. Yeah, Russia, Ukraine, a little fight. Well, it's not a little fight; it's a big fight, but had massive implications in the milling industry, particularly on wheat. Trump has become an event that is going to be one we will write books about. Israel and Iran, start something, the Straits of Hormuz close, and we start worrying about oil price, and we become so exposed to, geopolitics in a way that we hadn't before. In the end, you'll find, and this is a little bit of a sales pitch, I admit, NCBA Insurance will come and talk to you, we can help you with that, And I think within reason, I think find structures that really protect that exposure, because I think we're no longer just operating. A number of you are trading in Eastern Africa and Southern Africa all the way to Zambia. Tanzania announces something this week that says, you can't do transport business. Now, does that mean your truck has to hand over to a Tanzanian truck, which then has to hand over to... What does it mean? And we realize that we're becoming so much more exposed, and do use your financial partners to do that. I think the trade associations and agreements that you make, and I know there are many lobby groups come. Tobias was just briefing us that you're expecting a big announcement on AGOA potentially tomorrow. And if that happens, it does, to an extent, begin to protect us against this and open up markets that I think we should take advantage of. We have created forums in the past as NCBA to create awareness of this. As I said earlier, our economics function, Anthony, who I introduced earlier, Anthony, if you could stand and wave, is available, and we are very happy to come and speak to you with very contextual and specific to your industry and my company. I'm trading in X, Y, and Z. What are the opportunities that are available to you? My team, and with the benefit of our research desk, can have very specific conversations with you around how do you leverage Africa, what does it mean, should I be worried, should I be excited, and so on. And I think it's a capability that has existed. Please don't wait for our economic forums that happen every once or twice a year. I think we can have an economic forum for your board every time you want, and so please take advantage of that. We can help you navigate your way, understanding these. I think if on the government side, Ministry of Trade and Industry, I think with lobbies like HAM and KEPSA and all of the others, I think the more we can have these bilateral trade agreements, now whether they are regional, such as those trade blocks, or just direct, country to country that creates that, I think we're going to see that creating opportunities. We have, for example, been invited, and I'm going to pitch this to, there's an organization called Enterprise Singapore. They exist here to help people to do business. There's a trade type which is happening through Kenyan Invest to try and get people to come and invest in Kenya, and if you want to invest in those countries. So those bodies, Can Invest, and all of these can help your understanding of what bilateral trade agreements are existing. And I know the Kenyan government is looking at that quite keenly, because I think it opens up also additional opportunities beyond just the regional trade blocks.
Yes, and also the local trading that is very important, that we need to also really make those more robust. And perhaps one of those ways would be by financing local suppliers. Robert, maybe those are some of the solutions that exist. So this financing doesn't just go to the manufacturer, but goes all the way down to the local suppliers and then builds the entire ecosystem. I don't know if that's something that you think.
Thank you very much, Yvonne. That's quite a good point there. My colleague here mentioned about the supply chain support. I just want to talk about the upstream product that we offer that support upstream and downstream. You're talking about a client who is, let me talk about selling medical equipment, or a manufacturer who is importing his equipment. There's a local supplier. So we would provide support to the importer in form of letters of credit. We will facilitate, and then this equipment comes into the country, we will as well lease to the end user. So what that means is that the importer does not get in any way, in any cash requirement, because we provide the documents that are required for him to bring, and then we pay back on the say if we are leasing this particular plant, based on the lease agreement that we have with this manufacturer, then we will be able to pay off the supplier.
Yeah, and Morris, also, this cross-border trade that I think we're talking about regionally, perhaps you could speak to the ways in which you're enhancing the efficiency across customs and cross-border processes that then helps the faster movement of goods within the region.
Thank you very much. And I want to take this from the presentation which was made by Tobias on the issue of exports. One of the key areas that we look at from a government perspective is to improve our balance of trade. And that would mean that we need to find ways of ensuring that our exports in terms of volumes increase. And to achieve that, we must have strategies in terms of managing the exports. One of the key areas from a tax perspective is to ensure that we don't export taxes. Exporting taxes would mean that the exports have a tax element. That has the effect of putting a challenge in terms of competitiveness. So what we have tried to ensure, not KRA as an institution, because KRA is a collector, but KRA works with the national treasury in terms of formulating of tax policies. So what we do is to ensure that we follow as much as possible the destination principle in terms of levying of taxes. So that if, for example, we are charging VAT, we should not have VAT on the goods that are being exported. The same thing with goods that are accessible. We ensure that they don't have excess duty element. Otherwise, we become less competitive and we don't achieve the objective of growing the exports. The other element that is important for us is to take advantage of the regional integration. You have mentioned the AFCTA, we have the East African Community, we have COMESA. And the important thing is to create awareness for the exporters that there are advantages, there are preferential treatment that you get through export to the regional blocks. The other element that is important in relation to tax is to ensure that we facilitate exports. We have what we call an operational framework that basically ensures that we have a green channel for companies who have, we know that they are tax compliant. So we ensure that the exports are fast-tracked in terms of the processes on tax administration. That's what I would say are the key areas that we need to look at from a tax administration point of view and also from the tax policy.
Yeah, and while we're still on that, Morris, I've also noticed there's quite a bit of work that's been done to digitize and have real-time sort of clearance of goods at the various border posts, right? That then helps things move faster.
Yes. That is also an important point, and is a wider aspect of automation within the tax administration and within the processes that are aimed to ensure that we facilitate trade both within the country and outside. Yes.
Yeah, especially at the border points. Thank you for that, Morris. Innovation is obviously something that is very key. I want to get to you, Taris, about fintech and some of the data-driven models that you're using that enable you to perhaps be more specific and more intuitive in your lending. What does that look like in terms of the lending that you're able to do, onward lending to those in the industrial sector?
Thank you for that. I think when we talk about value chain financing and the primary objective of it is leave you manufacturing, stop lending. When you give credit, whether it's 30-day terms or 45 or 60, you're starting to do lending, which is not your core business. Our core business is to lend. Now, Peter, when he presented, spoke a lot about we want to see data, and I know in this environment with data confidentiality and all of that, we'll make the right, we'll sign the right NDAs and consents and so on, so that we can then share, because with that information we're able to help you stop lending, you do your manufacturing, we take it off you. And because our commitment is that it's with no recourse to you, right? Then I've got to carefully be able to understand that data. And by no recourse to you means if I finance your distributor and they don't pay me, I don't come back to you, right? And that's what you want. That helps you to sell to them more. You may have been restricted in the limit or tenor because you don't want to take risk. Because remember, I just said you're not a lender, you're a manufacturer. But to do that, what we're increasingly doing is one, use that data to analyze it and understand the behaviors. The biggest concern my board will ask me when I say I want to finance a certain manufacturer's distributors is, why would they give you their best? They'll give you the ones that don't pay. That's the biggest concern that I have to persuade my credit department and the body to which I'm accountable for, that we're going to get this right. And this is where partnership comes into play. You give me your worst ones, it's going to go off the rails very quickly, and then we will stop and how have you benefited? I haven't benefited, nor have you. So we use data and we've developed credit scoring that both takes the buying data, the cycle data, that businesses' own behavior in the market, because we all have a credit profile in the market. We've borrowed as directors of those distributorships. They have borrowed before, and we take all that data, put it all together, and we do two things. We decide how good or bad are you, and at some point we will say that's outside our risk appetite. And if you're that good, then what limit should we allocate you? Peter also said, and at what price? Because the margin cannot take the traditional interest rate that we give for a term loan and so on. Because if that distributor's margin is 5%, then you've got to price within that margin. If I charge him 13%, he's not going to make any money, and so he's not going to take the facility. So it can be a risky business, and this is where your support with your ERP and your data and our analysis, Peter and his team will be in workshops with you, because we don't have an off-the-shelf product that we say this is the one that we do for bakers, or for tea, or for sugar, or for cement, or for steel. Margins are very different, shelf lives are very different, and so we're increasingly using those data-driven models to decide what's the right product for you, what's the right product that we can then allocate to that individual in a manner that is scalable and sustainable. And we've got good examples that are developing around the sugar sector. We start to look at those that they buy from as well. And one of the other things about value chain financing is not just those who distribute downstream. I think you talked about upstream as well. It's those that you buy from. Remember, you need to buy, manufacture it, get somebody to distribute it, convert that to cash, and then come back. We are also looking at how can we help you pay them quickly so that they stop diverting and keep supplying you, so that you've got the right product in the right quality and so on. So it's a very collaborative effort, but absolutely data is at the center of it. And then ultimately we digitize it all, right? Because nobody has time to fill in application forms for the next consignment. Your distributor doesn't, your supplier doesn't, nor do you have, and it's all going to be digitized in a manner that makes it very efficient, lowers the cost for us to administer it as well, especially when we recognize that the margins can be quite small. And digital comes into play.
Yeah, and I like the fact that there is no shelf product, right? Because that means it's absolutely tailored to them and perhaps enables more lending to the SMEs who don't have the traditional collateral. The SMEs who form the biggest part of the membership of the Association of Manufacturers. I want us to stay with innovation for a bit to just understand from your side of things as manufacturers, what tools that you're using to, for instance, cut costs, increase efficiency, and give better product quality.
So I would say from the manufacturing perspective, investment in digitization is no longer an option, is the way to go. And the digital economy is now not a side conversation, but it's part and parcel of the process of the manufacturing sector. Right now, we do what we call precision manufacturing, where you only manufacture based on the need, so that you reduce a lot of wastage. So people are invested in a lot of technology that identify what are the needs, what is the demography of different markets, and what are the specific needs. So you produce specifically based on those needs. To certain cases, we do have real-time production where orders are made real-time, and based on that, it links to the production department, and the production department produces based on those orders. So to reduce a lot of wastage. At the same time, it also tracks payments, track any delays, any concerns within certain markets, tracks routes, manages logistics. So every manufacturing plant right now is invested in ERP systems that support their production, just to reduce a lot of wastage. We've seen what in the agriculture sector, what they do is called precision agriculture, where every plant has specific need. The water they need, the manure they need is very specific. Now that is also being done to the manufacturing sector, where you produce based on specific needs. I've seen the banking sector probably is also doing precision banking, where they track that coin from the manufacturer to the distributor to the consumer. And that is the way to go. So the manufacturers need not to be left behind in terms of digitization. And some have also gone to AI, artificial intelligence, just to measure the workforce capability and abilities to ensure that they maximize every production that they have.
Yeah, and some of those examples also go in towards perhaps where you're lending and who you're lending to, sustainability-linked financing. Maybe, Robert, you could give us some examples of some of the projects that NCBA has been funding, of energy efficiency products, green tech, that sort of thing, because that's also investing in innovation.
Thank you very much, Yvonne. I just go back to the energy area, which I know is a key cost area to the manufacturers, and the innovation we've done around it. We've at NCBA we've come up with a solar leasing proposition that is not your ordinary financing, because ordinarily if you go to the bank and say, look, I want to do a solar plant, you go to the bank and you say, this is how much it will cost me. They will tell you to bring your title deed. The next thing, or as a debenture, the next thing, and at the end of the day, you get a term that when you're paying, what you're paying electricity bill and what you're paying the bank is higher. So what that happens is that you go to get cash from elsewhere and start funding the operation. So what have we done? We've merged the period of the repayment, basically. If you look at this, I'll talk about the one that we've done recently. A solar plant that will last for 25 years. Our partners are here, and actually even the client is part of your membership. So for this project this plan that will run for 25 years, we've structured a term of 10 years. And the repayments, just to mention, from onset this particular client who is in manufacturing of consumer product is already saving 40% of the energy cost that you would have otherwise paid to the supplier, basically to the grid. And what this means is that from day one, he has 40% savings, and from year 10 onwards, there will be the full saving of the amount that you would have paid, basically 100% savings. And then there will be upgrades and all that. We walk with you the journey, basically, because leasing means we take away the burden of the manufacturer getting worried with my power plant produce as I expected. Is it working today? What will happen? What is the optimal size and all that? So we take that burden from you so that you continue concentrating on your manufacturing business while we handle that with our partners who are basically EPCs. And like just mentioned that upstream we also support the suppliers of the equipment that are used to build these plants. So yeah, Yvonne, I'll just mention that we just commissioned one in July. We commissioned a couple of them, but I'm just talking about it specifically because it's in manufacturing and it's in your membership. Yeah, thank you.
If I may give just one more.
Go ahead.
In the tea sector, we're looking at a couple of proposals where tea factories are coming together and thinking, can we generate our own hydro? Now that's quite interesting because a lot of you, particularly the ones in heavy manufacturing, one of your biggest problems is you don't have. Now whether hydro is necessarily going to be a stable, of course that still has climatic impacts on it, but it seems a very interesting proposition in the context that it can significantly lower your reliance on the national grid and only use the national grid as backup. So a couple of interesting proposals that we're looking at in that space. And in very much the Sondo Mirio model, yeah? I don't know whether you know about Sondo. It's a power plant without a dam. Because your biggest problem with making hydro, you need a dam, which has extensive problems with land that is now going to be buried. You know, you have a nice cliff, you pipe the water through a turbine and so on. So some interesting proposals coming in there. So maybe that might be something we could also help manufacturers do. We're also seeing tea factories starting to question, do I have to keep relying on burning firewood? As you know, for those of you in that sector or are aware, things around your boilers, and they're starting to think, can briquettes from bagasse, they have actually a higher biomass, and you solve a very big problem for a sugar manufacturer. They've got mountains of that bagasse and they don't know what to do. Literally every sugar factory that we now support, we expect them to have a cogen facility where they generate their own power from the waste that is called bagasse. And things like that are beginning to now extend it. And for those who are extending terms, much longer. I did see a question, does my facility have to be limited to 5 years? No, it doesn't. Depending what it is you're doing and how much economic value it is going to generate to your project, that can be 10 years, and we have on occasion even entertained, longer terms, than that. So I just wanted to add those two examples in terms of co-generating. And so I'm not sure what waste you generate and whether it has the potential to generate power. And maybe if it has, I think there's some interesting opportunities there that we will be very happy to partner in discussion with.
Yeah, and thank you for that. You're already starting to answer some of the questions, many of them. So I'll just have Maurice Ori delve into this issue of innovation, and then I'll come to your questions. There's quite a number, so I'll try to make sure we answer as many of them. As we wind up on this issue of innovation, KRA is doing a lot of digitization of its operations that helps then make even the process of compliance for many of those who are here in the room better, faster, so that they're spending less time, but still managing to be compliant. Maybe you can talk to us about those digitizing, the digitization of those operations and how you feel it has enhanced compliance and made it easier for your customers and your clients to pay what is due to you.
Thank you very much, Yvonne.
One of the focus of the tax administration is to improve administrative efficiency. How do we do this? And if I had time, I would have told you the story of KRA. Having joined KRA when it was just formed, I can tell you what we used to collect in a year. We have digitized the return processing. People now have the advantage of filing tax returns from the comfort of their rooms. We have digitized the payment system. We can now make payments online without necessarily coming to Times Tower or going to a bank to make a queue. We have digitized the customs system, the ICMS, to ensure that for management of imports and even exports, it is more efficient than it was before. But more importantly, what we are moving towards now is artificial intelligence. We have already implemented that in customs, and we are also implementing the same on domestic taxes. This is to ensure that we ease the burden of compliance, which, as you know previously, was very complicated, but we are trying to make it much easier in all aspects. So we focused on the customer-facing perspective of automation and also internal. And we believe that that will also reduce the costs to the manufacturers and the taxpayers in general. Yeah.
Thank you for that. I want to get to your questions now because there's quite a few of them. I think already on the issue of whether NCBA offers long-term loans to manufacturers beyond the 5 years, Tyrus says yes. Just sit down and have a conversation with them. I want to now get a question for the Association of Manufacturers. Tobias, what role is the association playing in advancing sustainable manufacturing?
Thank you very much. We have a sustainability wing under the Association of Manufacturers. If you have been observant, every year we do Energy Management Award. Is a sustainability program that promotes energy conservation in our country, and we partner with the Ministry of Energy. We partner with GIZ and other like-minded organizations to promote energy efficiency around the manufacturing sector. As you may understand, now we have signed a couple of agreements, particularly opportunity to export to the EU market, and one of the requirements is for businesses to demonstrate sustainability in terms of their processes. And we have been able to educate and make our members aware in terms of the requirement and promote sustainability through your respective processes. So we have also the Center for Green Growth and Conservation. That center supports all our members to go green. So any member who is interested in going green or needs information around going green to promote renewable energy in their processes, please let us know. We've been working with the banks, and NCBA is one of them, who are financing the sustainability bit in terms of if you're buying machinery to promote your sustainability, if you're investing in other areas that promote sustainability in your process, we can be able to link you with NCBA to get the financing. So yes, we are driving sustainability as an association.
Okay, this one I suppose to whoever can take it on the panel, the impact of the US tariff hikes on the Kenyan economy, which by the way take effect today. And I've not seen any negotiation between both governments, so we stand at 10%, don't we?
Yes, we still stand at 10%. There are no negotiations that have been going on. They have been releasing the final agreement for each country. I think they have released a couple of countries. Kenya, we are expecting ours either today or tomorrow. But if nothing changes, we will remain at 10% in terms of our export and go to the US, which, where I sit, is still an advantage to us, because some other countries who are our competitor in that market have been given 35, some have been given 50%.
And how about you, Taz? Maybe some thoughts on the US tariff hikes?
I actually wanted to invite our head of research in the economics practice to make those comments.
All right, okay.
Because I think he'll give a wider, you can use this.
There should be a mic, please. Can we get a mic? Yes, thank you.
Yeah, Anthony Muli. Thanks.
Okay, thanks, and good morning, everyone. Thanks for joining us. The impact is still quite dynamic, as Tobias has alluded to. Dynamic in the sense that just before that's President Trump took office, we did about 8% of our total exports into the US market, which is about $677 million. Most of it being about 85% is on the textiles, strictly coming out of the EPZ factories. However, if you look at the developments in the last couple of days, and especially yesterday, most of our key competitors are Vietnam and Cambodia. The tariffs that have been slapped on those countries were significantly higher than ours, a range of 37 to 46%. We are at the base tariff of 10%. However, the developments of President Trump's office yesterday might have a bearing in the sense that now Cambodia, Vietnam are at 20%. Compare that to our 10%, one gets the sense that we have a margin of about 10% to remain competitive, which calls for maybe the next leg being how competitive are we, vis-a-vis these two or three countries. But overall, the context is that given the tariffs are only about 8% of our exports, then one gets the sense that the key market, which is Europe, about 22% plus of our exports, and also the ESC remain quite crucial for us going forward. And that means that overall, Europe is still quite stable into the remainder of 2025. If you look at the latest IMF projections that came in on Sunday, then one gets the sense that we are not very overly worried, up until we get news of one or two export markets are going into a recession or not. And I think given where we are at, where weather is still quite favorable for us, if you look at commodity prices are still quite competitively low vis-a-vis historical averages, then we could still be competitive even with the 10% base tariff into the next phase. But obviously the negotiation will be critical that we close on them with regard to accord, just to buffer us way above the 10% threshold that we need to be competitive vis-a-vis the Asian countries. Thanks.
The issue is efficiency. If you look at the Asian companies, they're very efficient.
Yeah.
They produce in a few days or in a few hours. Their output is quite higher than us. So the issue is no longer about quality. Kenya can match any quality in the world.
Good. So efficiency, maybe, which is just what we've been talking about with innovation, to start to up that a lot better.
Yes.
Because there will be an increased demand.
Correct.
Yeah, so we've got to give them the product. I want to sort of collapse a few questions into one. So talking about non-traditional collaterals that NCBA provides, I think that has been talked about in terms of the data, right? That goes hand in hand with the question around unsecured loan opportunities to support SMEs. And maybe all of this can be collapsed into the one important question about what makes, or what is the unique offering that NCBA has that they cannot get from other banks. So maybe you can put all of that into one. Yeah, the gauntlet has been thrown, so.
If there was, it would be the biggest bank in the world. Like I said earlier in my brief remarks, banking is fairly commoditized. I mean, everybody can generally do most of the things other banks can do. But I think we do have some unique capabilities. I think we've proven that on asset finance, whereby by a stretch the market leader over several decades, and we continue to strengthen that. Every so often you see us announcing. What does that do for you? I think it just makes it easier for you to, especially on the distribution aspect, because we are aware that for a lot of you, you do own a fairly substantial logistics business. You've had to do it because sometimes insourcing it makes it efficient, but we do have very efficient mechanisms to finance your fleet in a manner that creates efficiencies in the way you borrow. So you do not need to give me land, for example, to be able to finance your next 20 trucks, right? We can take those trucks as security. We can even convert to cash some of the fleets that you have that through something that we call, what's it called, auto loans. What is it called? Auto loans and so on. So if you've got trucks, you've paid off, they still have residual value, you need to extract working capital out of that. That's something we can do for you. So is it necessarily unique as in that example? No, but I think it's a capability we've solidified. I think we're the only bank with a material leasing practice. I think by a stretch in the sector, the practice that Robert leads, I think we've established that and continue to lead the market on that by a stretch. I did talk about the combination of our insurance business that we acquired last year, but also our brokerage business, which I think ranks top 3 in the market amongst the banks. So not only can we arrange your insurance, but we've also got a fairly well-established brokerage business that helps you arrange your sort of enterprise protections that you can look at. But ultimately, I think what we stand for, and in my corporate side of the business, our mission is to provide you trusted advice that is bespoke to your needs. And that's what I invite you to have a conversation with NCB about. This is the problem I'm having, and my challenge to a lot of my coverage teams, led by Charlie and Carol here, is the conversation cannot just be about the loan that you want. What else is giving you a headache? And sometimes that simple question, can be, how much time have you got? I've got all the time for you, sir. And then, do you want to take a seat now? And then maybe that's where we really create solutions, because I'm sure there is something that is disturbing you. The more your relationship manager knows about it, we'll come back in the room and we'll figure out how can we help you. I think, is that unique necessarily? No. Is that what we're trying to do? Yes, and we've got to continue improving that, and that's my commitment to everybody here. Let's talk about what need you have, and we will figure out a solution around all our product capabilities and group capabilities to be able. For example, recently one of our manufacturing clients said, I've got a lot of shillings stuck in Tanzania, I can't get dollars out. And we started working with that, and we did provide a solution to an extent. I think liquidity of the dollar liquidity in Tanzania has somewhat improved in the interim, and that has eased somewhat. But that's an example of not a unique capability, but we promise you a unique approach to try and solve those problems and figure out, maybe we've got somebody about to remit money into that, and we settle that within the law, of course, Mr. Morris. But we will create solutions that I think can help. But we won't know about it if it's keeping you up awake at night and you're not talking to your banker about it. We would like to see ourselves as a partner, and that's how we create unique solutions.
Yeah, a partner. Here is one to you, Morris, and it's a request. That SMEs can pay taxes after payment from their clients rather than pay on an issued invoice, because this can help SMEs to remain compliant. So a request from the SMEs in the room. I know that's always a big one. So we want you to just sit with that and take that request. There is no pressure on you to make any commitment here whatsoever or any statement on the same, but just pass that on, upwards to the commissioners, the Commissioner General as well. I want us to start closing, and maybe the best place to do that would be to talk about from where each of you sit in terms of policy. What sort of policy alignments are needed on industrialization, on trade, from where each of you sit in your perspective that will enable us move this needle forward. I'll start with you, Tobias.
So from where I sit, manufacturing has a huge potential. We just need to address about 4 things to unlock the potential. And I spoke to some of them. One is our competitiveness, because we are competing with our counterparts across the region. Manufacturers in Uganda, manufacturers in Tanzania, and in Asian country. So every policy decision that our government makes needs to be aligned and thoughtful in terms of promoting our competitiveness. The other thing is about predictability, and we talk about this because you see different government agencies, different regulators coming up with a policy statement or policy decisions that impact negatively on the manufacturing sector. For example, if a manufacturing sector or a business had projected that my taxation or my cost is X, and within the same year, a different government agency introduces an additional tax, that does not go well with the plan. So predictability of the policy and tax environment is still a concern. We are pushing for government to have a cockpit view of all the taxes, fees and charges, because it becomes so hard for the manufacturing sector to plan. The third issue is about opportunities to export, and we need to do all we can to tap into all these agreements that we've had through AFCFTA. ESC market is our big market. We need to continue with that market and expand into further into other countries within ESC. African market through AFCFTA is also a huge opportunity, $3.4 trillion market that is untapped, about 1.4 billion, 1.3 billion people. And then the last one in terms of market access is also the EU market, 300 million people, giving us an opportunity to export into this market. So we need to support manufacturers to export into those markets. So those are the things that I say, if we address, and then NCBA gives us money, then we will be good. Thank you.
You've been adversely mentioned. Perhaps the next best place to go to is to you, Tobias.
So I suppose it's like our parting shot. So 3 things. I think I'm personally bullish on manufacturing in Kenya. I think we're on to, and I think we are naturally advantaged. If you think about our people, there are not many places in Africa you can speak English, assuming that was any indication of capability. Okay, so pardon me, but assuming it was, right from the gate, the watchman or the taxi driver that took you to the guy on the floor, it's not many places in Africa that you can do that, in fact in the world, right? And so we've got a natural advantage around people, whether the centrality of Kenya as a location, and our infrastructure, believe it or not, we've got great infrastructure. It doesn't always feel like that when I'm on my village road, I know. But when you think about our road network, rail, the SGR and things like that do matter. Kenya Airways as a hub, our port. I think just naturally lends us the opportunity to, be a manufacturing hub. And I think the mindset around both what used to be spoke about when I was a teenager, import substitution, right? And I miss those words because I think it was a really good positioning. Why should we import toothpaste? And it personally frustrates me a little bit because I think those are things that I think we should have policies that I think should make it harder for things that we manufacture here, not to import, finished goods. But then again, what you talked about export as well, noting that centrality of Kenya and the troubles around us, parts of DRC need, cannot do this, and it's a big market. Ethiopia to the south, Somalia, South Sudan. I think we've just got a natural advantage, around us, so I think we should leverage. Your takeaway is that CBA, I think, kind of shares that the portfolio with the biggest exposure in our book is manufacturing. right? And directly to those that we tag as manufacturing, that's about 21% of our exposure. If I extend to the other manufacturers that sit in other parts of our portfolio, for example, particularly agribusiness, you're looking at something in the region of 70-80 billion exposure into your sector. And that's a big commitment, I think, from our management and board in terms of supporting you. So the support is there. Now, risks abound, and that's the second thing I want to say. You talked about NPLs. We've got 21% NPLs in the sector. That's a really bad loss ratio. 1 in every 5 are going wrong. That, you know, if you think about it that way. And so we are thoughtful and have the commitment to create structures that will help you. Whether that's how we structure your CapEx, tenors and what have you, whether that's how we structure your working capital and begin to offer solutions around value chain financing to simplify the way you finance your operations, whether it's leasing or asset financing, to create structures that work. Because I think when we collaborate, I think we lower the risks, and that, you know, sort of continues our confidence to continue supporting you. And finally, I think the point to my last comments around unique solutioning and solving problems. Please look at your bank beyond the size of the loan, the rate on it, or on the deposit and so on. I think there's, and the FX rate, as I talked about all our capabilities in research and economics to product solutioning and so on, I think there's so much more value you can extract from your banking partner. And I want to invite everybody, let's have those conversations. The only way you succeed, I always say banking is the only business that only succeeds if their customers first succeed. Much unlike yourself, you know, if you sell your product, you've succeeded with a light touch, but banking requires that you're successful for us to be successful, because we don't make money when we give you the loan, we make money when you pay it back. So thank you very much for your thoughts, and karibuni sana NCB.
Thank you very much for that, Tyrus.
Yeah, thank you very much, Yvonne. I just want to look at the items that are out there, but not really publicized. A bit of the taxman has been kind enough to allow the lease rentals to be tax allowable. But do people know that? So if you are leasing your equipment, all the rental payment you are paying goes down to your expense, to your business expense. What does that mean? Lower money to Morris. So I would encourage each of you just to consider the value of asset is by the use and not necessarily by the ownership. If you come from where I come from, we love titles. You find that we have a couple of them in the house, even if you can go starving with them. So I really encourage you to look forward, and I look forward to more engagement on buying those plants, those equipment that you already have in your premises. Let's have them as NCBABC, and then we allow you to have that cash, and you keep that equipment to generate more value for your business. And thank you very much.